Over the past month, SoFi stock has had a roller coaster ride. Over the past 30 days alone, the stock is down 12%. However, in between that time, they reported one of their best earnings ever, broke their 52-week high, rising above 1150, 26% move. They gave all of those gains back, dropping 27%. But throughout that entire time, something interesting has been happening behind the scenes, and in this video, we're going to be talking about it. Now, it goes without saying that much of the decline that we've seen in August so far is macro-driven. Stocks have been falling across different industries, many of them falling despite fantastic earnings reports. And while a pullback might be necessary, it's important to understand where big money is moving in and out of the markets. And to do that, we need to take a look at institutions. Over the past few days, I saw tweets around JP Morgan and Morgan Stanley increasing their holdings in SoFi, and this prompted me to take a look at Fintel, where we can see 13F filings, many of which were filed over the past 2 days alone. So I went over to Fintel and I looked up SoFi. Keep in mind that Fintel is a free resource that anyone can access. Basically, large institutions have to file their 13F with the SEC, which shows ownership in terms of purchases of any particular company. Now, there's of course a lot of information that we can learn here, such as the total institutional ownership of SoFi being 683 institutions, 93% of which are long, i.e. betting that the stock will go up, and only 19 of them from the 683 are short, for a total institutional value on the long side of 2.68 billion. Now, in this chart, we can see the institutional ownership over time, which shows a steady continuation in SoFi stock, really starting in 2022 and lasting throughout the year 2023 to a slightly lesser degree. Most funds, it seems, were accumulating more heavily in 2022 when the stock price was lower than it is today, which is a little bit difficult to see with this overlaid line. But the takeaway here is that institutions have been steadily adding to SoFi consistently for the past 2 years. And this is attributable to, number one, the company's consistent execution in terms of their drive towards profitability, their member growth, their product growth, but also the fact that the stock has been beaten down so much. In December of 2021, SoFi was above $20, and today it's around $8 per share. The stock has fallen quite a bit, which leads to institutions buying more because it hits their valuation models if they are bullish on the prospects that SoFi is showing. Okay, so if we scroll down now to the 13F filings, you can see this table where the date is on the left-hand side, arranged by the most frequent filings on August 15th or August 14th. But if we scroll down, you can also see August 10th, August 9th, 7th, 4th, and so on. In other words, all institutions file on different days, and it's very frequent for these filings. Above, there's a filter on the chart showing that all of these filings on this chart are effective June 30th, so we know that these are all recent numbers. Now, one other thing to note here is that the green rows indicate new positions that have been opened. In other words, people that didn't have an ownership in SoFi before, just opening a new position since June 30th, and the red bars indicate positions that have been closed in that same time span. In other words, funds that have fully sold out of SoFi. So let's first filter this chart by descending in terms of number of shares and the net new funds that have added. And immediately after that, you can see a huge add by 2 Sigma advisors who added 13.48 million shares of SoFi as a net new position as per their August 14th filing. So if you scroll down a little bit, you can also see some of the familiar names. For example, ARK Invest, who we've mentioned on the SoFi Weekly podcast a couple of times, just started their position in SoFi over the last 3 months alone. And if we keep scrolling, we can see just how many funds have added SoFi over the past 30 days as a net new position. And scroll a little further and we can see the funds that have closed out their positions in SoFi. Some of the big names here are, of course, Wedbush Securities, who completely sold out of their SoFi stock, Toronto Dominion Bank, one of the biggest banks in Canada, and many other names stick out here that have just ended their ownership of SoFi altogether. One of the callouts here is that you have more funds that have started new positions than you have funds that have closed out new positions, which is definitely a trend that you want to be seeing, especially when you have some funds like the 2 Sigma advisors adding over 13 million shares in their first purchase. Now, I'm going to go back and filter this chart just descending by the total number of shares so you can see the biggest institutional owners. And immediately you see that the new purchase by 2 Sigma advisors is actually the 9th largest institutional investor by share count, above Morgan Stanley and others. Now, one thing to keep in mind is that these funds also go by different names. So you'll see 2 Sigma advisors and you'll think it's a new fund, but it might just be a subsidiary or a branch of 2 Sigma Investments, which already has 9.5 million shares in SoFi previously. So that's one other thing to look out for when you're trying to assess if these funds are net new additions or if it's just a subsidiary or a parent company investing under a different name. The other call out to make is that some of these funds will be buying on behalf of their customers. Now, I know this was the case with Morgan Stanley. Chris Hager had posted about this around Morgan Stanley's addition, and it was shown to be on behalf of their end clients, with Morgan Stanley acting basically as an intermediary. However, when we have the chart laid out like this, we can see Vanguard obviously sits at the top with 73.8 million shares. They increased their position by 6% over the past 3 months. We also saw additions from BlackRock, although not as much, but huge additions from some of these funds who doubled or tripled their position over the past 3 months alone. One other interesting thing to note here is that some of these funds that I've been adding are just competitor banks. And this was what was being promoted on social media as something very bullish for SoFi. The fact that JP Morgan Chase increased their position in SoFi by 51% to 5.8 million shares. We also see increases from Bank of America Corp to 4.9 million shares. Citigroup increased their position by 28% to 2.1 million shares. Credit Suisse by 24% to 2.1 million shares. And of course, the big one being Morgan Stanley, increasing by 86% to 12 million shares. Again, this is not Morgan Stanley themselves holding the shares, but acting on behalf of their clients. But regardless of that, it's bullish because it still shows the institutional demand for SoFi. We can see the stock price falling for SoFi on a macro, but institutions are slowly adding. One of the reasons why this is important is because these institutions are also analysts that are upgrading or downgrading SoFi stock. And so sometimes there's discrepancies, right? Because JP Morgan analyst is downgrading SoFi stock, meanwhile the institution is acquiring shares of SoFi stock. And retail investors are looking at this and saying, is this like manipulation? How is this allowed? But the flip side of that is if JP Morgan is accumulating SoFi stock over the long term, there's something that they like with regards to the prospects that they see in SoFi's future growth. As a result of that, the analysts are more likely to be upgrading SoFi stock. It cuts both ways, but the reason I bring it up is because institutions accumulating more heavily into SoFi telegraphs their bullishness in SoFi's prospects over the long term. That's all I'm trying to say with that. One other thing to note is that Jesse Dow posted this chart on Twitter showing the technical levels for SoFi. With the stock having dropped so quickly, it's now approaching some technical support levels from a previous breakout in the $8 range. Now, take all of this with a grain of salt because I'm not a technical trader, but basically what this chart is saying is that SoFi is potentially due for a bounce higher. However, I also believe that the company is going to bounce higher, but not necessarily from a technical perspective, but more due to the fundamental reasons with regards to the company prospects for Q3 and Q4 driving towards that company profitability. Finally, moving back to Fintel, one other thing that we can look at if we change the tabs here is the short interest. I've mentioned in previous videos that SoFi's short interest has hovered over the past 2 years anywhere between 10% and 20% plus. More recently, in a video that I made in mid-July in anticipation of the Q2 earnings, the short interest was sitting around 15% afloat, and currently we're sitting around 14%. In other words, not much has changed with regards to the short interest despite a fantastic earnings and despite the fact that SoFi fell 27%. You would imagine that if I were shorting SoFi stock and it already fell 27% and I made a bunch of money, I would be covering those shorts. Or if the company reports fantastic earnings and is in fact accelerating their growth rate, I would be covering those shorts. So the fact that those shorts are not covered and that short interest hasn't really fallen that much is interesting to me because I'm struggling to understand some of the bearish points for SoFi. Of course, one could easily argue that they're still not profitable, and until they see that profitability turned on, that they're not going to invest in SoFi, that's fine. But the fact that people are still actively shorting this, almost to the same degree as they were before they saw the Q2 earnings, considering how strong the Q2 earnings was, is a little bit mind-boggling to me. Now, all of this is really interesting, and I definitely recommend all investors to just keep an eye on Fintel just on a semi-regular basis to get a better grasp of where large institutions are allocating their capital, as that will usually telegraph more cleanly than analyst upgrades or downgrades how institutions feel about these companies. We want to see institutions buying more of the company and forming more of that steady base. Personally, I bought more SoFi stock today. I bought it at $8.38. I also added to my $15 strike price leaps for 2025. I own $15 leaps and I own $5 leaps for 2025. And while this does increase my cost basis slightly on SoFi, I think that the company is incredibly cheap relative to where it's going. That's only because I personally buy into what management is saying around Q4 profitability, and a lot of what I'm seeing around SoFi from a news perspective backs that up. So that's just a personal decision that I'm making. Of course, if the stock drops even further back into the $6 range, $5 range, I think that's fairly unlikely. I think we've formed a solid base, but if it does, it goes without saying that I'm going to be buying more and more heavily the further down it goes. As simultaneous to this, on the side, I'm also increasing my cash position as well. So I'm going to be prepared either way to, allocate some capital to take advantage of the fall, but have a large pile of cash ready to go in case we do fall even further. But for this video, I just wanted to talk about the institutional numbers. Very bullish to see. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.